Buddy, it's Brian Shannon from alphatrends.net. Today is Friday, the 14th of October, and here's the numbers for the week. It certainly doesn't tell us what happened, but we'll look at the charts here in a moment. Semiconductors lost 8%. They're down 43% year to date. That is not good, obviously, for the rest of the NASDAQ. Interestingly, the Russell 2000 was up a little bit, as were the biotechs and the Dow Jones. Oil and the oil stocks were higher as well. So we've got a mixed bag here, but overall, we're still in a crummy environment. Here's the S&P 500 on a daily time frame, and you can see that once again we made it right up to that declining 20-day moving average, and that's where we ran out of buyers after that big reversal from the CPI report. So, a lot of people were looking at this thinking that a bottom was made. One day doesn't make a bottom. A bottom is a process, and today we pretty much failed to show that the buyers could take back control. This morning on Twitter, I'd put a chart out. This being a 5-minute chart, so this is basically the beginning of the week here, the 10th, 11th, 12th, 13th, etc. This was yesterday's opening, and the volume-weighted average price anchored to it. So that blue line rally, came in right at 360. Well, the volume-weighted average price from the gap lower last Friday also came in at that same area, as did the 5-day moving average. So what I wrote here was we're coming into a potentially important area of support. Key level there is potential. We never know support or resistance until after the fact. But I had pointed out the 2-day volume weighted average price, the 5-day moving average, the VWAP from here, and this is the daily pivot. If you don't know what that means, Google floor trader pivot. So there were 4 reasons to think it might become support. And I said it's a potential scenario that I sketched out that could happen, but it's not a prediction or a trade plan. And what actually happened when we look at the 5-minute time frame is that you can see that we never got back above today's volume weighted average price, and that was the key for a trade to the upside. I was hoping that maybe we could do this, get back above the daily volume weighted average price, and then the buyers could come back in and take control. Instead, we stayed below that volume weighted average price. We broke below this key level, and we end up near the low of the day. So how we use these levels is the main point, that we look at a level of interest and we say that level of interest has the potential to become support. So we want to look at the price action on a shorter term time frame for evidence of support, and if we see it, then we would take a position, and then of course the most important part would be we would set our stop underneath maybe the low of the day, which would have been over here, or underneath this low. The point is nobody knows what support or resistance is until after the fact. They are potential levels. I see people all the time saying, hey, the market has support here or there, and you just don't know until it goes and hits it. So on the weekly time frame, we came down exactly to the 50% retracement of the COVID low to the all-time high. That's what this black line is here. You can see it says 50%. I just made those lines a little bit darker, and I've kind of misplaced some of them, but this is a 38.2% retracement, and this is the 61.8. So in addition to the 50% retracement, we also came down to the volume weighted average price off of the high of 2018, and that is so far the low. But it's a level of interest. When we look at the daily time frame, does it look like the buyers are in control? We're still below the lows that we made in June. We're still below a declining 20 and 50-day moving average, and we're back below a declining 5-day moving average. This is what I had sketched out for subscribers on Thursday night, saying here's the potential scenario that we're looking for. The circle meant this is where we would be a buyer and a stop under here. Of course, that did not happen. It's only a potential scenario. The volume weighted average price since the CPI is right here. If we stay below that next week, then there could be bigger trouble for the S&P 500. That's going to be a level that if we get back above it, then near term we're turning a little bit more neutral. But again, the benefit of the doubt still goes to the sellers. There's no such thing as down too much when there's still sellers in the market. There's nothing to say this market might not come back all the way down to that 320 level and hit the 61.8% retracement of this rally. There's nothing to suggest otherwise. otherwise. We are in a bear market. The trend is your friend, unless, of course, you're on the opposite side of it. The NASDAQ, same story. Here's our weekly chart. You can see I went all the way back to this level to find a volume weighted average price of significance, and I didn't even draw it in the right place. But the point is, we're breaking below every level that seems like it should have been support. We should have maybe seen some support at this volume weighted average price or off of the peak of 2018. Instead, the market is below those. Here's an important level. We closed right on that. But more important than that, we still have a declining 20, 30, and 40-week moving average. I've been saying it for months. If they don't scare you out on the way down, they will likely wear you out when the market takes its time to recover. It's highly unlikely we're going to see a V bottom. We might see that this is the bottom, but it's going to be more like this. And that longer term moving average, it's going to take time. I'm going to keep drawing this in until people get it. And this is the same is true for all of these stocks that continue to be garbage. Names like, Coinbase, still in a terrible downtrend, still below all the key moving averages. Intel, at 30-year volume weighted average price levels. Just terrible stocks on the downside. Facebook, Meta, whatever you want to call it, it's a garbage stock. It's coming down to the volume weighted average price all the way from the IPO 10 years ago. Most people who are in this stock are losing money. That's a level of interest. I don't know if it's going to be support. I wouldn't buy there. I wouldn't look to stick a bid in there and hope to get lucky. It's a level of interest where we look to shorter term timeframes and say, is there actually evidence building that there's a tradable bounce? And again, if it's going to take time, I wouldn't expect a stock like Facebook, even if it rallies all the way up to 150, and a lot of people will get excited about that. I think you're more likely to see something like this, and then maybe in 6-9 months, we get a move that's sustainable, something along the lines of this, not like just calling blindly for $1,400 price targets for a has-been company like Zoom. And it's a has-been stock. Maybe it's not a has-been company. I don't know. Peloton, a has-been stock, just a complete waste of time. And everyone basically is a loser in this stock. It's a shame. It's terrible. DKNG, and how many times can people keep falling for the same garbage in the pot stocks? We saw news about the pot stocks this week. Biden said that we're gonna get rid of criminal records for pot. So we had a 1-day surge. Everyone thought that was the big thing, and they failed and went lower once again to new all-time lows. It's just amazing how many times people can fall for this bullshit in these pot stocks. They're in downtrends. Don't let these little 1-day news snippets get you excited and think that it's turned around. There's no such thing as down too much because there are still sellers in these stocks. The Russell 2000, as noted, is where the relative strength is. Relative strength is great. If you have to be 100% invested, if you run a fund and your charter says you have to be invested, well, you want relative strength because it means you're losing less. But if you're an individual, relative strength just means you're losing less money. It doesn't mean you're making money. If they're still in downtrends, they're in downtrends, and it's a waste of your time to be involved. Don't fall for the terms relative strength. If you're watching this on YouTube, please share it with your friends, give it a like, maybe make a comment, whatever you do there. I always look at all the comments there. So semiconductors, again, these are really where the damage was done this week. If you go back to the 2018 low, to the all-time high, we retraced more than 61.8% this week. That's right here. We also came very close to the peak, the volume weighted average price off of the peak of 2018. So this is a level of interest. We look to shorter term time frames, starting with the daily time frame. Say, is there any evidence the buyers are gaining control? With a declining 20, 50, 100, 150, and 200-day moving average, no. We have a 1-day blip to the upside that gets people excited. What's the volume weighted average price since that event? The event was we saw a huge gap lower, the market reversed, and the average price that the SMH traded at since then is 177. So look where the sellers showed up, right at the declining 5-day moving average. 177 is the average price that people paid on the long side, but it's also the average short sale price, meaning the shorts are on average up 4 points. The longs on average are down 4 points. Who's in control of the trend? The sellers are clearly in control of the trend on every single time frame. There's no such thing as down too much. This might end up being the bottom at the 61.8% retracement in the VWAP from that peak. It's just a level of interest. It's not a level to do business. I repeat that all the time, but some people say, "Hey, look, Brian, it bounced," and then then the next day it doesn't bounce. Biotech, same story. We had, I think, a little bit of strength in here this week. I forgot what that. I did. I put the sheet away, but um, anyways, neutral at best. The 200-day moving average still declining, the 50 still declining, the year to date giving it trouble. It's still kind of hanging around this level that had been support previously, and it's just chopping back and forth. If you're trading these biotechs, I don't see where the advantage is here. It's just back and forth every day, chopping longs and shorts up. So why be involved? Energy names is mentioned. They were up on the week. I was hoping, as I mentioned to subscribers, that they would see a little bit of a shakeout first and then go. Instead, we saw them rally past this point and then fail. So I think you have to be very careful with the energy names next week. They kind of failed with yesterday's rally as well. The volume weighted average price from that is up at 82 on this XLE. And if you look at the average energy name, I think they're all going to need to kind of settle down somewhere in this range into the next week and then rebuild and then possibly move higher. But right now, I would not suggest a purchase here. They're back below a declining 5-day moving average. I think it's likely or possible and likely that it comes down maybe towards this VWAP. We see a nice shakeout. It starts to recover, gets back above the 5-day moving average. Always think ahead and think that in this type of market, the easy, simple, smooth moves are not holding. Those breakouts that everyone looks for, they are not holding. So what's the less obvious way that things are going to go? And that's what I like to look at and specialize in and make sure that first and foremost, risk management is job number one on every trade setup I talk about. If you haven't taken a 2-week trial to Alpha Trends, alphatrends.net is the place to go for that. Let's talk about Tesla. I had tweeted about this one most likely heading to this volume weighted average price, and that is key. Let's look at it on the weekly time frame. That's key. That volume weighted average price is where the stock broke out. It had a large breakout here. So that was a key event, the breakout. And we can see that it had been support for quite a while, that volume weighted average price. And as it was over here at 260-ish, I said, I'm looking for it to break down to this volume weighted average price. Some people on Twitter mistook that from me saying that's where I thought it was going to bounce. It's in a downtrend. It's a level of interest where it could bounce from. And I said, if it does bounce, what's more likely to happen is we get a bounce and then inevitably it comes down to the volume weighted average price from this low right here from COVID. That's that orange line. That would put the stock down at 182-ish. And there's nothing to say that's going to be the low. If it comes down to that level and fails to hold, I'll probably put a volume weighted average price off of here, and you can see how it touched the COVID low, and maybe it's headed to 140. I don't know. I do know that a lot of people are personally, emotionally attached to a stock, which doesn't make any sense at all. As I was told, don't love something that won't love you back, and a stock will not love you back. Why do you love Tesla? Why do you love Apple? You might like their products, but when the stocks are going down, there's still shitty stocks like every other stock that goes down. You're in the stock market to make money, not to be a cheerleader for a CEO, a celebrity CEO, or for a great product that they make. You have to look at it from an objective standpoint of who's in control, where does the stock have the potential to go. I would not be surprised at all to see that this level hit, maybe even by the end of this month. The point is we're still in a bear market. There's a lot of risk. Don't be a sucker for these quick turnarounds. If you try to trade the turnaround, be sure to have your stop. And as soon as the sellers, let's say you bought Tesla and you felt really good about it as it got back above the daily VWAP yesterday. Let's look at a 5-minute chart. So maybe you got back involved in it over here yesterday, or you're right even here with your stop below the low of the day. Great trade. It rallied up and it made these nice higher lows and higher highs. It made a higher high this morning. It broke that higher low. Get the hell out of the stock. That's what short-term trading is all about. If it instead held and then continue to rally, well, then maybe you can get a turnaround. But all of these stocks and downtrends are guilty until proven innocent. You have to look at turnaround candidates as a potential candidate with very low odds. So risk management is always job number one.